All right, so here we are, Chapter 6, Question 7a. So in this question, we have a company called Thomas Topology. They completed all their journal entries and adjusting entries for the month of April 2019. They've given us their chart of accounts with the account numbers associated for each category of expenses or account items. And we're asked to do 5 things. We need to prepare an income statement, a statement of owner's equity, balance sheet, closing entries, the post-closing trial balance. We've also been provided the adjusted trial balance for consideration as we go through these next steps. So the first step is to prepare the income statement for Thomas Topology. I've taken the liberty of already creating the header information, being the company, the name of the statement, and for the period, which is the month ended April 30th, 2019. If you look at the trial balance, I've also indicated the income statement accounts that we need to reflect on that said statement. So you first of all start with service revenue. Always start with your incomes. Okay, and we'll enter the fact that it was $26,300 as per the trial balance. We would then start with expenses. First of all, depreciation expense, which was $120. Insurance expense being $100. Interest expense being $50. Rent expense being $1,000. Salaries expense $8,000. Telephone $250. Travel $8,000. For total expenses of $17,520. The last step then would be to determine your net income or loss, which in this situation is $8,780. The next step for this assignment is to create the statement of owner's equity. In this situation, the owner's equity was only affected by the balance that's sitting in capital. There were no contributions. So therefore, we only have the opening balance being $18,000. We have 0 contributions during the year. We were told there were none. The net income from the previous statement of $8,780, which creates a closing capital as of April 30th for $26,780. Again, you'll notice the titles being Thomas Topology, the statement of owner's equity, and this statement again is for the month or for the period that was ended April 30th, 2019. The next step for this company is to create the balance sheet. Balance sheets are always as at a point in time, which in this case for Thomas Topology is as at April 30th, 2019. In this case, we will always start with assets first. First of all, being cash, accounts receivable, prepaid insurance, equipment, offset with a contra account being the accumulated depreciation on that equipment account for total assets of $57,030. Next section is our liabilities, starting with accounts payable, unearned revenue, and a bank loan, which totals our liabilities of $30,250. Next section then is our owner's equity, which you would then pull the balance from our statement of owner's equity done in the previous step, not from the trial balance at this time. So the owner's equity indicated for Edwards Capital was $26,780 for total liabilities and owner's equity of $57,030, which is equal to our assets of $57,030. The next step in this exercise is to create the closing entries. So for the month end, you would then close out in 3 different steps, sometimes 4 if you actually have a withdrawals account. In this case, we do not. The first step is to close out the revenue, which is sitting as a credit balance. Therefore, you need to debit your service revenue for $26,300 with the offsetting credit going to the income summary account, and that's to close the revenue accounts. You would then move on to your expenses. You would have to credit all your relative expenses accounts, so we have depreciation, insurance, etc. Totaling a value of expenses of $17,520, which is the debit to the income summary account. So it's a credit to your expenses, a debit to your income summary. The third step would be then to move the balance that's in that income summary account over to your capital account. So if you notice up above, we had a credit of $26,300, a debit of $17,500, which would therefore leave a credit balance of $8,780 in the income summary. Therefore, we need to debit income summary to close it out, and therefore credit the Edwards capital account. Another way to validate this is this entry, this final entry from income summary to Edwards capital, should always balance the net income as per your statement, your income statement. And if you generated an income, not a loss, it would always be a credit to capital. You're generating equity for the organization. If it was a loss on that income statement, it would be a debit to the capital account because you lost money, and therefore the opposite is true for income statement. The last step for this exercise is to create the post-closing trial balance. Now that we've closed all the revenue and expense accounts, we should not have any remaining. So therefore, we need to carry over our assets and our liabilities, and our closing capital should also equal our earlier adjusted trial balance. Again, you can validate that $26,780 to the statement of owner's equity. I hope this was helpful.